want to guess how long it takes on average for a family to pay off their credit card debt in the UK?
5 to 10 years.
Yeah, it's 16 years.
Wow.
On average. And the model of a credit card is, of course, to lend you more money than you can afford to repay so that they can charge interest. That's the model. I mean, it literally tells you that.
And you're encouraging it as a system, right? So it's so stupid.
And so I thought that seems like a good problem to try and fix. That problem needs fixing.
How does that provide some insight of how you start Zilch?
I've never sort of sat and thought, I want to be an entrepreneur, I want to start a business. And I don't think my father was like that either. I think it was more, I can see there's a problem. I feel like I understand how to solve this problem and I want to engineer that problem and I fix that problem, right?
Firstly, why UK?
I landed in the UK and I went to go and get a credit card and obviously I couldn't get one. And that's when I sort of stopped and said, hang on, there seems to be a problem here. There might be something worth us considering fixing.
Zilch is unusually kind of in a category of its own.
Actually, we had a 52% gross profit margin.
And you have a very cool slogan, fastest company to unicorn status in the UK. Okay, Philip, welcome to the show.
Thank you very much for having me.
Zilch is unusually kind of in a category of its own. So when you're explaining it to an absolute idiot, how do you do it? What do you really describe? What kind of categories, what kind of examples can you give me?
Well, the elevator pitch, right, if we want to try and summarize it, would be we are turning ad budgets into free and affordable credit deals, discounts, and rewards. I mean, that would be like the kind of, if I could sum it up in a sentence, that would be what we would say. But of course, we've just been chatting. It's naturally a lot more complex than that. So, the real thesis of Zilch is that you've got two industries that were typically built completely separately, payments and advertising. So if you go back 20, 25 years, you were walking around with cash in your pocket, you looked at a billboard, you thought, geez, I like that, whatever that thing is, you may go and buy it and you'd use cash to buy that thing. You couldn't link these two things. These events happen completely separately. So these industries existed on their own. Today, that's different, right? You're scrolling through your phone, you see something that you probably don't need, but you like the look of it. You tap on that ad, that's tracked. And then, of course, you go and you use some payment methodology to buy that thing. And those two events are completely linked. You can track the one thing to the other. And so if the world has changed to that degree, what you really do is you look at it and you say, well, if we had to build these two industries today, would they have been built separately or would they have been built together? And our view is that commerce means that today they would have been built together. And so if you take that as the framework, like the kind of foundation of how we think about the world in 5 and 10 years' time, we sort of said, well, there's a lot of waste in both these industries because over time they've become oligopolies, right? They're controlled by a handful of companies in both. And so what that leads to is inefficiency and waste. So if you combine these two things, you can convert that waste into a lot of value for both parties. And that's the premise of Zilch. So we could talk a bit more about that in detail, but that's how we've thought about the business and the bedrock and foundation of the company.
Got it. And we will talk more about Zilch, don't worry. But first, I want to take you back to a moment in time. So I was reading a little bit about your history.
Yeah.
You sound like a pretty smart guy. Did pretty well at uni. Pretty well, like straight out the blocks, really. Tell me a little bit about how gaming led to this.
Yeah, I mean, I think it's like when you say pretty well, the one thing that I've kind of like, I feel like I've learned over time is I've actually just been quite lucky that I've spent most of my time just doing the things that I enjoy. Really, just am completely passionate about. And we sort of say this to everyone at the company as well, at Zilch. We sort of say, you have to be genuinely interested in something to become fantastic at that thing. Even if you're the smartest person in the room, you could probably be great at a lot of things, but you're not going to be brilliant at them unless you have a genuine interest in that thing. And that's kind of just what I've done. So I've spent most of my time just doing things, quite selfishly, that I'm genuinely very interested in. And so that, if I kind of think back, that starts really in, I was fortunate to kind of grow up. I was born in 1984. And I sort of then grew up and saw computers come to the market, personal computing, and then, of course, mobile devices come to the market and completely change the world. It's like a fascinating time to have been alive. And so, I think about when I was sort of 11 or so, we moved to San Francisco for my father's work.
Also lucky.
Fantastically lucky to have had that opportunity. We were down the road from Silicon Valley. And, and I remember my father brought home a laptop and it was one of those Sony Vaio laptops. I don't know if you remember that brand. It was like the most awesome brand. And I remember like opening this laptop and I was like, wow, this is amazing. Look at this thing, right? It's not this big CRT, big screen, you know, although the wavy keyboard of the old school computers was cool. This laptop was like, wow, came in a leather sleeve. And I was like, this is amazing. And actually it was a work machine. And he said, no, you can keep that laptop. I was like, oh my God, this is unbelievable. And I didn't even know what to do with it. Right? I was like 11, 12.
Oh, right, wow.
So we were, the family could have this laptop. And so I would just open it up. I didn't even know what to do with it, right? I'd like open it up, type some stuff in Word, Microsoft Paint.
Not even Pornhub at that time.
I mean,
where do we even go?
There wasn't even, it was dial-up internet, right? You had 56K modems. I think you'd have to wait an hour and a half to download
get an
it.
image.
Exactly, right? It's like, so you just open it up, close it, type on Word. And then I started playing around with the DOS prompt. And it was interesting because you could start to write commands on the DOS prompt, and you could start to write small scripts in the DOS prompt. And that was really quite interesting. And so sort of fast forward a year or two, we came back to South Africa. So I'm from South Africa. We went back home, and, and then all of a sudden what I found is that dumb phones started coming to the market. And so you started seeing these Nokia 3310s. Snake was like all the rage. Samsung D600, like little flip up Samsungs. LG chocolate, like that was really cool. All these phones were coming out. And what I loved about this is that, even though you could write a bit of code on a laptop, the problem is internet was so rubbish. You had to still go to an internet cafe to access it. No one had these awesome laptops they were carrying around. So even if you wrote a program that was useful, it was hard to get that in people's hands. And even if they had it, they couldn't really use it on the go. So what I loved about mobile devices is that they were right in the palm of your hand, right? And you could play this game on the phone. And so, that's what really sort of games like Snake, I mean, it sounds ridiculous to say when you think of gaming, we don't really think of gaming that way today. But even those simple games are what really got me interested in saying, how could I maybe write my own game on this mobile device? And obviously roll forward, I started playing around with that. So while most people were kind of, taking time to do other things, I was investing a huge amount of hours in this thing I just was interested in. And my father was obviously a technologist, so we used to sit and code.
You mean whilst people were sitting on the toilet playing Snake trying to win, you were actually trying to develop something?
That's right. Yeah, right. Exactly right. And I mean, also trying to fill up the entire screen with the Snake as well. I mean, that was critical. But, that was kind of the thing, is that I got to invest a lot of time. And because I had my father, who was a technologist and a coder himself, we used to sit and play around with Turbo Pascal, trying to code games for these devices. And that was good fun. And then 2007 came around, and I still remember it like it was yesterday, and Steve Jobs picked up this device and he explained to everyone, it's an internet device, it's a music device, and it's a mobile device, mobile phone device. And, obviously pulled it out and revealed the iPhone. And in South Africa, remember, this is a developing economy. We didn't have access to all the latest technology. You used to get it a year or two after everyone else in the world. And so the only way you could get hold of this device is you had to go to the US and get it and bring it back and jailbreak it so you could actually use the phone. Because everything was AT&T or something like that. And so I that's where I developed the love for this technology, but more the fact that if we could build something meaningful and you could put it on these devices in people's hands, they could take it everywhere they went, and that could probably change the world quite significantly, even more so than building some program on a laptop. And so that sort of got me started on this thing. And so, I then went to university, studied computer science, mobile technology, which is a weird thing to say because I don't even think people would call this anymore, and AI, which back then was more machine learning, not LLMs, things like that. And really the biggest project I had there and I built was something to solve Sudoku. These Sudoku puzzles. Again, they became all really the rage at the time, and people were filling them out in newspapers and buying books of Sudoku puzzles. So what I could do now is I could use the iPhone, access the camera, and you could take a photo of the puzzle, and I could solve the puzzle for you with this program. And that became quite a cool app. And so that's really where my love for technology, especially mobile technology, began. And like I say, all of this really was not in the pursuit of any specific goal. It wasn't, I could make money through this. I could do a business, doing this. This was really just, well, people were out, maybe doing things that I at the time would consider a waste of time. I just remember we'd go on holidays with friends over uni holidays or school holidays, and they were like, there's 3 weeks left, what are you going to be doing? And I would be like, I want to go finish this app that I'm writing. And they're like, why the fuck would you do that? You know what I mean?
Yeah, we're like skateboards.
Yeah, exactly. Let's go let's go waste our time doing something else. And for me, I just really invested a huge deal of time in it. And so you rack up the thousands of hours doing this thing. And so, ultimately left university to start this mobile gaming business, which,
What was that called?
So the company was called P-Bell, very inventive. Philip Belamant, so it was P-Bell.
Got it.
And effectively the whole idea was, how do we bring person-to-person gaming to a mobile device? So you could do this networking LAN games. We loved doing that, but that was on PC, a laptop. How do you do that on a mobile device? And that was the aspiration. Of course, like all good aspirations, they don't typically just work out, right? And so we had a bunch of us from university went to go and do this thing, and I managed to convince a few friends to be like, hey, we're going to build all these games, it's going to be great. And we started this company. And effectively, we started with these little games, but the whole idea was that you could use your mobile minutes to buy things in the games and play the games. That was the concept. So that's how we would monetize these games. They were freemium type of model where you could then top up and buy a sword or something like that, right?
Right, okay. So sort of like what, like Candy Crush-ish, but before that was the thing.
I mean, if you think about it, actually, I would say that's too generous. So it's probably like Farmville, but a really crap version of that.
Yeah, okay. No, I didn't feel like I'd built the rapport yet to be like a shit Farmville.
Yeah, that's it.
Yeah, totally.
Yeah, you could say that.
Yeah.
And that may even be too generous. I mean, these were I'm talking about Nokia.
You're a poor man's Zynga. I got it.
Exactly, right. Yeah. And so we were like, okay, cool. And people started playing the games, and we were like, this is exciting. This is great. Downloading the apps. And remember, before the iPhone sort of was pervasive, people still had a lot of these devices. So you had to rewrite the app sometimes 75 times, because you had to write it in Java for mobile devices, smartphones. You had to write it in Brew for BlackBerry. You had to write it, obviously, in a native language for iOS. Android wasn't even around then. And so you had to port this to all the device and screen sizes. I mean, how many screen sizes Nokia had? I mean, it was ridiculous, right? And so that was the challenge. You actually wrote a game and you had to end up writing it 75 times. So it was a lot of hard work, but it was good fun. And you got to really understand a lot of the intrinsic way that mobile devices are built, the software on top of them, how you optimize. There was no like pixel conversion type you could get off the internet. If you wanted to move a character's leg, you had to rewrite and draw the pixels, forward a pixel, pixel, So we had lots of fun doing that. Of course, the company, wasn't exactly printing, millions in profit. And what we realized over time is that when we finally stopped to look at the data, because data analysis and data science back then was also like, no one knew what that was.
Yeah.
And so we were just looking at app downloads. Do people open the app? Are they buying things in the app? And the answer was yes, yes, and yes. That's great. But what we didn't realize is no one was playing the game. So we're writing these games. We're hiring people to help draw all the characters. We're coming up with storyboards. I mean, it was great, But
no one appreciated your creativity.
No one cared. Yeah. Or at least at the time we didn't know, though, right? So we thought people were loving these games. Like, oh, look at this new character. But people weren't playing the games. They were actually just loading the games with prepaid minutes and then transferring the minutes to one another through the game and using it almost as a mobile payment platform.
I don't feel like I understand that. So double click on that.
So we had, I don't know if you remember, still today in the UK, you can get this where you get prepaid minutes on your phone, right? So you go and you buy 20 quid of minutes or whatever.
I was young once.
Exactly,
I remember
right?
all of this, yeah.
So basically in South Africa, I mean, that was just hard work. There were no contracts. So you had to take cash and go and buy some minutes and you'd have them. But you could then transfer those minutes to another device. And so if I wanted to pay you for something and I didn't have cash on me, I could send you airtime minutes on the phone through the game. So I could just send you the minutes through our game. You would have a wallet of value. Yeah. And you would now have 12 Rand of minutes I've transferred you, which you could use for the game, or you could use online to actually buy data bundles and things like this. So people started transferring each other currency that we had created. Now, of course, we had created this with no real license to create this. We didn't even realize that this would be a thing. And so eventually we just stopped developing the games and we turned it into a mobile payment product. And people could use this to enter competitions, they could win prizes, airtime, cash, they could transfer cash to one another. And that's the business we ultimately rolled out in about 20 plus African countries over 5 or so years. Became very successful. And had nothing to do with games. So, of course, the people that had come to join me from university, they thought we were going to be the next PlayStation, like this is going to be amazing. And turns out we were transferring airtime minutes from one person to the other, but we were doing huge volume across 20 countries.
Running a business across borders used to feel like chaos until I found Wise Business. Wise is the app for doing things in other currencies, including managing finances of your international business. With one account, my team can pay suppliers in over 40 currencies. Clients can pay us from around the globe, and since my team has their own logins and limits, I can just check in when I feel like it with total peace of mind. With Wise Business, there are no hidden fees, there's no exchange rate markups, and there's no subscription costs that eat into my profits. Setting up the account was a breeze, and payments go out in as little as a few seconds. Wise even syncs with my accounting software, so I'm not bogged down in the weeds. Plus, with 24/7 live support and security like two-factor authentication, I can trust that my money is safe. To learn more about how Wise could work for your business, visit wise.com/business. It's international business made simple. That's amazing. Okay, fine. So that's P-Bell.
Yeah.
And what happened to it?
So that business, what we ultimately did is so my father had a cards-based business, which was this technology company I mentioned, went to San Francisco. And so he was working for someone, left there, started a company doing card payments. And this was your old school magstripe cards, right? And that evolved into the chip and pin that all of us know today on a plastic card. And they had no mobile technology. So what we ultimately did is we had all the mobile technology, mobile payments, that seemed to be the future. These magstripe cards and chip and pin technology, which they had, and they were one of the creators of the first real like decentralized blockchain technology on these chips. And we actually then sold this business into that company. So we merged these two businesses. And that's what happened with this business. And that group was listed on the NASDAQ and reverse listed on the JSE, the Johannesburg Stock Exchange.
Okay.
And that was good fun. And we had a lot of fun doing all of this. And that was up until about 11, 12 years ago.
So how old were you when you had this like life event, essentially?
So when I started the business, I was about 21 or 22. And then I think it was about 27 or 8 when we put the two... sold P-Bell into Net1 was the name of my father's company.
And what did it feel like? Is there like I'm getting a sense of like, you know, it was all amazing. Lots of things actually worked. And that is very fortuitous as well with timing and technologies and all of that stuff that happens in startups. But I'm getting a sense of it that you're like, yeah, but also my father's company. So there's like a bit of, I don't know, not as much pride as you would hear from someone telling an exit story.
No, I mean, to be honest, I actually think almost the opposite. I think it's actually more so what it is that the way that I've kind of always just been brought up and think about life, and I get a lot of this from both my mother and my father is, you know, I've never sort of sat and thought, I want to be an entrepreneur, I want to start a business. And I don't think my father was like that either. I think it was more, I can see there's a problem. I feel like I understand how to solve this problem and I want to engineer that problem and I fix that problem, right? That's kind of the way that I've always thought about it. So, you know, and then on top of that, my father has this terrible problem where he can't remember anyone's name. He just doesn't remember people's names.
Philip, right?
Yeah, exactly. Like he doesn't get
one.
You, you know. So he sort of just he doesn't really remember names, and I don't know if it's a conscious thing that's just happened. And he just sticks to it, but he's just very useless with names. And but what that did is it was interesting. Is that then what that means is everyone's equal and no one's special. And I found this to be very useful actually in certain instances because he could be meeting I was going to say the president of the United States, but I'm not sure where we are on the ladder of, I don't know where we're going to put that, but he could meet, someone tomorrow morning. They could be, multi-billionaire, or someone the next day and they aren't, and he wouldn't know any different, right? Everyone gets treated the same. And I like that. So I also think about that. That's sort of washed through in some of these events. Was it exciting? Yeah, it was great. It was really exciting. But to be honest, it wasn't really about an exit. It was more about, what are we now building? What's next? So I have to say, whether it's good or bad, I'm not sure. But I don't spend a lot of time dwelling on, we had this event, we all got up the next morning, we went to work and we got on with life. And we're a bit like that at Zilch.
So on that note, the event happened, you woke up the next morning, you got on with life until when? So do you have an earn out? Do you take space in between? How does Zilch come up if you're full-time working in the business that you've exited and you're trying to make a bigger thing, etc.? So tie those two moments together.
Yeah. So I mean, look, so generally, again, for good or for bad, I've never really done a lot of people leave school, they do a gap year or two. I actually think, there's some great examples of where that could be useful. I just didn't ever think of life this way, right? Because I was just busy with something I was passionate about and I just got on with it and really think about it. So there's no take a break or anything like that. I think it's, have you found the next thing? Or are you building something new that you're genuinely excited about? And then you don't consider it not to be a break. You just don't even think about it. You're just busy with it, right? You're excited about it. So that's sort of what happened. So really, we ultimately got to a position where my father was retiring, and this business was a developing market business, was an African predominantly business. I'd spent every second week of my life largely in a different African country, for 10 plus years at that point. And so, the whole aspiration was, how do we take this technology? It's very difficult to build a business where you're doing financial services, you're lending to people that in most countries, in a lot of countries in Africa, in some cases don't exist formally on any electoral roll. A lot of people, in fact, don't even have fingerprints. If you're doing hard labor every day, it actually removes the fingerprints from your hand. So you can't even use biometrics to identify this person. And, if you can get good at lending into a market like that, underwriting this individual that has no tax number, they don't have an SI number, an NI number, they have no fingerprints. How do you do that? It's very complex. And if you can get good at that, the challenge was, could we take all of that learning and bring it to more developed economies, the UK or the US or elsewhere? And that was the aspiration. But at the time...
And why would you pick the UK?
Well, I mean, it was just more developed markets. Didn't need to be the UK. But that was the aspiration. And at the time, really, the discussion with the board sort of didn't go as we expected. It was, it was a long, winding conversation. Is this the right thing for this business? Is this the right strategy to take? And ultimately, the board decided this is a developing market business. It has a beachhead in these markets. We should stick to this, double down doing this. And frankly, for me, I just thought, I've done this. I've had great fun doing this. I really want to look at building something in a market that is significantly stronger in GDP, has a much larger customer base and TAM, especially for the type of technologies that we see coming down the piece in the future. You don't want to be lagging. And so that was the aspiration. So ultimately, I exited the group and moved to the UK about 11 or so years ago, with no real major objective in mind. We're going to go and do this, but more a case of, let's go figure a few things out. Again, my father and I would sit and play around with some blockchain ideas, fiscal memory, solve VAT reconciliation in certain countries and people avoiding VAT. Just interesting different ideas we could patent and think about. And ultimately stumble upon something. What do we think is a problem? And obviously where that began is I landed in the UK and I went to go and get a credit card. And obviously, I couldn't get one. And then I went to go and get a mobile device, and I was going to get it on contract. And of course, they said to me, "That's no problem, sir. Can I have your credit card?" And I didn't have one. And that's when I sort of stopped and said, "Hang on, there seems to be a problem here. There might be something worth us considering fixing."
So 2 questions here. Firstly, why UK? You had, no connection to the UK that I can hear yet.
No.
You've had this amazing experience with San Francisco. There's an obvious place to go and do, exciting unicorny type stuff. But then, of course, I suppose the other side is the UK has this open banking, scenario with a lot of excitement and noise around it. But like you said, 11 years ago, that was still a punt.
Definitely. I mean, look, there's a couple of things, and some of them are just more obvious than others. The UK is closer to South Africa than the West Coast, right? It's just what it is. So, as a starting point, you look and say, it's closer to home. I had a number of friends who had come over to the UK. There was a number of policies in the UK that I really liked, actually. So you had SEIS, EIS. So starting up a company in the UK was actually, to be honest, when I looked at it 11 years ago, more interesting. You could get more support from the country and the government here than you could actually even in the US, right? You had entrepreneurs relief, you had all of these interesting things. And so actually it was more of a pool here, which is, this is a country in the middle of the world, right? It's clearing and settling huge amounts into Europe. A huge amount of investors from all over the world trust and depend upon and invest in this country. Big GDP for the size of the country. I mean, pretty incredible here in the UK, and very diverse. And that's the other thing I really liked. When we lived in San Francisco, it's quite a culture shock, right? Because you're on the other side of the world. This was 25 plus years ago. I recall at one point I was running in some athletics race, and my mother was sitting in the stand, and someone said, "Oh, where's the new kid from?" And they said South Africa. And one of the ladies came to sit with my mother and talk to her and say, "Oh, that's brilliant. What country?" And it's just what it is, because back then I think everything, the world was less of a global village. You're on the West Coast. People didn't really even know where Ghana or Zimbabwe or South Africa was really on a map. They couldn't point to it.
Yeah.
So what I loved about the UK is that's not the case.
Okay.
Right.
And okay, so that's all very fair. It's nice and refreshing to hear someone say something nice and positive about the UK. Sure, that was then, but hey, we'll take it. Okay, so how does this moment that you are stuck with this annoying moment of, yes, credit card issue, but no mobile contract, that's an issue. How does that provide some insight of how you start Zilch?
Yeah, so I mean, really what happened is, so you had the credit card thing, right? So you go, okay, this is a bit strange. I've built a business, had this exit, moved over here, you have some means, and you can't get a credit card. You're like, okay, this is odd. Now, there's some obvious reasons why that may be difficult, because your credit score can't follow you around the world, and there's some companies doing some interesting stuff to try to fix that problem. But what I did is I thought, let me just look into this. What is the state of consumer credit here in the UK? And of course, like anything, if you spend enough time looking at it, you probably find some inefficiency. It's just natural. But here there was a bit of, that was different. It wasn't inefficient. It was, quite badly inefficient. And what I mean by that is that if you start to look at credit here in the UK, and this is not dissimilar in most now first world countries, the problem you have is that it's very hard to get onto the credit card or the credit scoring model without getting a credit card and a revolving interest credit card. That's the advice you might receive. Why don't you go take out a store card with revolving interest so that you can build a credit score? Now that's quite interesting set of advice. But when you actually then zoom out and you start to look at what is the cost of consumer credit on average for credit cards here in the UK, you realize very quickly that the average representative APRs are more than 35%. Now, that wouldn't be legal in the US. It wouldn't be legal in most countries in Europe, in fact. And so then you dig a bit further and you go, well, okay, how many consumers are actually revolving debt on these cards? How many families have debt on these cards? And how long does it take them to pay that debt off? And you want to guess how long it takes on average for a family to pay off their credit card debt in the UK?
5 to 10 years.
Yeah, it's 16 years.
Wow.
On average.
And you're encouraging it as a system, right? As in you're literally saying that's the default thing people should do.
And the model of a credit card is, of course, to lend you more money than you can afford to repay in the interest-free period so that they can charge interest. That's the model. I mean, it literally tells you that, right? This period is interest-free. We will make no money in this period of time.
It's funny because just on a side note, because I think a lot of this has to do with your upbringing and stuff, but my parents had no money when they were growing up. And then when they came into money, like, middle age, etc. And so I grew up, with less money at the beginning. And then in my teenage years, we moved into a nice house and everything else. And that was new. But because my parents are psychologically so conditioned to not have money, I was very much taught about not having debt and not spending more than I have. And so, it's fascinating. Because of those things are so ingrained, I'd never had any credit. I always worked on debit cards. I never spend more than I have, like all of this stuff. And you start to do business, and actually you learn that, there is value in loans and there is some value in debt and, calculated risk and all of these things. But those are such habits that I had to unlearn. And what is interesting is they seem sensible. It seems sensible not to spend money that you don't have and other things like that. But culturally, that's actually countercultural here.
It is. Yeah.
That's so bizarre, isn't it? Like I had to learn how to be comfortable borrowing money so that I could be a good normal British person and get into the system. Of course, if you want to get a mortgage or anything else, you're kind of screwed if you've actually been sensible with your money at that point.
Yeah, I mean, you're just not going to get one. Right?
Exactly. And entrepreneurs are doubly as fucked on that as well. So
and
I had to rely on my wife's job and all this stuff, even though I had a successful company. So it's so stupid.
Yeah. I had a very, my upbringing was very similar to yours. My father had moved over from France, didn't speak a word of English when he arrived, married my mother who's South African, and his parents went back to France, and then they sort of made their way through. He got his first job. And so when we were born, it was the same, right? And so I think that bedrock's actually quite useful because the mindset is to be very prudent. And then as you say, you learn over time, okay, but hang on, this could be a tool actually for us to do more trade and do that sensibly and profitably.
Yeah.
But that's where the starting genesis of this kind of identifying this problem. And so we looked at this representative APR. We said, that seems to be a challenge. That's a problem, right? And I think it was Warren Buffett said, compounding interest is the seventh wonder of the world. Now, that's not true if you owe someone the money for 16 years, right? And so this is a major tax on people, not just here, but in the US. If you look across the US and the UK, it costs us about 150 billion every single year just in fees and interest that we pay to credit card companies, right? If you can imagine that, it's like $400 million a day. That's just going to interest and fees, not the stuff you're buying, right? Just servicing the interest and the fees. And so I thought that seems like a good problem to try and fix. That problem needs fixing. And then, of course, it's like, well, how would you even set off to go about fixing that problem? And we kind of come back to what I said right at the top of the discussion, which is you've got, this whole concept of commerce being advertising and payments together. And if you looked at what people are doing with this credit, it sounds obvious. They're buying things. That sounds like an obvious statement. But if you follow the money, you realize that a lot of what people are buying are going to brands or merchants or sellers of goods and services that are, of course, spending a huge number of dollars, trillions of dollars a year, on advertising to bring those sales through the door.
Yeah.
And so you kind of go, oh, okay, well, that's quite interesting, right? Because someone else is benefiting from this credit. There's someone else that benefits from this customer paying this interest and fees. And it's these sellers. So why don't we go and see what those sellers are paying in ad budgets? And if you look at it today, again, you find it's inefficient. It's a problem. And why? Because it's an oligopoly. It's the same as consumer payments. They're oligopolies. A handful of banks control more than 80-90% of debit card and credit card payments in most developed countries. In advertising, 5 companies in the world control most of this budget. And so the problem with oligopolies is they serve themselves, not consumers. So if you look at ads, Google ads today, you pay about $1 a click. They convert at 0.3% into sales, roughly, right? That's about $30 on average a sale. That's anywhere from 5 to north of 30% of what you're selling, you're paying to big tech companies. So, and the reason for that, by the way, is because you're paying for impressions and clicks. And in the world of AI, this is getting even worse. Most of those impressions and clicks are some mobile device farm, in a warehouse somewhere where they're scrolling and clicking and scrolling and clicking. There's no human here, right? There's just clicks. And the problem with this model has always been that what you get paid for generating a click or impression is more than what it costs you to run a computer to click. So what are people going to do? Yeah. They're going to arbitrage it all day long. And so almost 35% of ad budgets are wasted. It creates this waste. So what we did is we said, well, if you've got someone who's taking out credit to buy something from this party who's wasting a huge amount of ad dollars to bring that person to them and make the sale, if we can combine these two things, you can make this more efficient for both. So you can significantly reduce the cost of bringing a customer to that seller, and at the same time then use that budget to subsidize the cost of credit deals and rewards to that consumer buying.
Yeah.
And that then became the solution. We said, this is the thesis. Let's go and see if we can prove it.
And I presume with a great thesis like that, a strong background like yours, easy to raise money?
No, that's not. Yeah, I like the tee up on that one. But
your face, you're like, is this guy fucking joking?
Yeah,
oh, good,
exactly.
He is joking. He is
Has
joking.
It been
okay.
easy for you?
Yeah, I read somewhere that he had 250 fundraising calls. Is that right?
It's probably more than that. I mean, it's hard to even keep track. But I think
maybe you should have just got better at pitching. Want to know what kills big deals faster than anything? Security compliance. Honestly, it's a headache, and I don't know anyone who likes doing it. But there is a solution, one that makes security compliance easy. Vanta. Think of Vanta as your compliance wizard. They automate everything for SOC 2 and ISO 27001, turning complex security requirements into a simple, streamlined process. Over 8,000 companies from startups to giants trust Vanta to handle their compliance. Use Vanta so you don't get slowed down by security paperwork and focus on what matters, growing your business. Visit vanta.com/secret leaders now and get $1,000 off in your first year.
I think so. That's the moral of the story.
Sounded good 7 years on when you just told it to me that way. It obviously wasn't so crisp back then.
Yeah, pretty crap at the pitch. But it's like, the funny thing is so we went off, started the company in back end of 2018, so 2019. Great, let's go build the business. And fortunately, I founded the business with my father, so he chairs the board. And it's fantastic to have his strategic oversight, and I'm fortunate to have someone like that. And my co-founder Sean O'Connor, so he's a northerner, and so what I love about that is the mental model of how you spend money and make money and deploy your money is very similar to how I grew up, which is you make profit and you reinvest carefully your profit into building your company. And I think northerners pride themselves on
for sure
on making sure that every penny is going to work really, really hard. And so we're very like-minded in that way. And so what happened is we start this company, go and build the technology. And as we start rolling out, we're like, right, we can go and raise some capital. Of course, COVID comes around, right? And so everyone's now, when I say everyone, 12 and a half people that were working from home, everyone's on their own. And we kind of like, now we got to go raise the capital. So let's start making these calls. And, what was useful about COVID is before you would have to travel around and meet all of these people, right? Because they want you to come in and tell them about the company. If you think about before COVID, you would never raise money without having sat in front of someone.
Yeah.
Didn't work. So what was great about COVID actually is we could do 10, 12 pitches a day. That's right. It's just Zoom call, Zoom call, Zoom call, Zoom call. Before you would never be able to do that. You could maybe do 2, 3. And so we just kind of knocked these out, right? Hundreds of calls, and you know what it's like. And so eventually you get the first check. That's the hardest part. And then you can tell the next one, oh, actually, we've got 20% of the raise done. Do you want to come in? And so it gets a bit easier.
And how much did you raise?
So in total for today, we've raised over 240 million pounds in the business total. And initially, this initial round was meant to be a couple million. We ended up raising 10 million on the initial, this sort of calling that we did through COVID. That was the starting point.
And you have a very cool, slogan almost, which is, fastest company to unicorn status in the UK. And that is something quite incredible, no?
It is. I mean, again, it's like we always, it's a bit how you asked me earlier about these kind of events, that we see. And I mean, it is great and it's fantastic. I mean, we always say to the team, let's take a quick moment to appreciate it, but let's get back to work. It's for us, I think what's more interesting is how much are we saving customers? How many customers are we serving? How good is the product? Is it getting any better? Genuinely in our business, those are the things we'll all get around, have a drink and have a big celebration for. The milestones and these things that are a bit more veneer, I struggle to really stop and go, oh, that's exciting. I mean,
But there's sort of an effect around this stuff though. So especially in a fintech, being a unicorn, and then more recently 2 billion, right? That, whether you like it or not, and I mean you will like it because you're the founder CEO, so it's fucking great for you. But ultimately, it creates consumer confidence too.
It does,
like that in a fintech, and so there are some companies where you're like, well, it's all fluff, and who really cares? Like whatever, they just managed to find SoftBank or whatever, right? And just convince them. But in this space, it matters because consumers are always cautious about where to put their money. And there are lots of fintechs, and there's a very much in the UK as well, a rising tide lifts all boats kind of scenario. So it's very helpful that there's a Monzo and a Curve and a Revolut, and the market is very receptive to new fintech ideas here, I would say, new ways to spend money and stuff. Like they've done a great job of making people more comfortable that you don't just need stuff in Lloyd's and Nationwide the old way. But so does having a unicorn status as one of these businesses. Like that is ironically something that your early adopter customers will want to know, because it means that where they're putting their confidence is also where smarter people than them have put their confidence.
I mean, I don't disagree with you. And obviously, I could never sit here and say, we weren't proud to hit those milestones.
You're not going to be my first guest ever to be like, no, I was pretty disappointed the day.
Exactly right.
Shit.
But I think the funny thing is that people don't realize, and this is the problem with entrepreneurship or when you build things, is that people don't sometimes realize just how painful it is. And so, when someone sits down and says, we'd sit with media and we'd do a interview or whatever, oh my gosh, this is so exciting. You've been working on it for, 6 months. You've been grinding it out for 18 hours a day. So by the time you get that thing done, you've moved on, right? Like I was thinking about it 6 months ago when you didn't know about it. We've moved on. We kind of on the next thing. And typically the next thing as the CEO founder of a company is the next problem, right? It's typically not the next fantastic thing because you get the distillation of problems. That's how it works. So, so normally I'm quite preoccupied with how we're fixing the next problem to get to the next level. But look, we were really proud of the achievement. The point is actually, the point you make is interesting, is I found that the unicorn status of the company works really hard for us to attract good talent to the company. From a customer standpoint, actually getting regulated. So when we announced our FCA consumer credit license, we actually saw a huge increase in customer applications. So it's almost what you were saying there, which is that clearly customers, they're savvy, they get it, they understand. I mean, I couldn't believe it actually when I moved to the UK that people here really understand quite generally Section 75 protection and chargebacks on cards. I'm like, how are people even understanding this stuff? Like, normally if you're not in payments, you wouldn't even know about this stuff. But here the consumer is really savvy. So I think when we announced that gave customers a huge amount of confidence in using our product and our service.
Yeah. And there are obviously such big points of differentiation that makes sense. So let's talk about what makes Zilch so unique, so incredible. So you're converting, I've got numbers here, in case you don't remember them, obviously, at 55.4%. So you're converting, is that ads to conversion?
Yeah,
compared
that's
to Google and Meta.
Click to sale.
Click to sale. I mean, that is insane. I don't really understand. So Google and Meta are 1% to 2%, as you say. So how is that even possible?
And
what are you doing? Forcing people to buy? If you don't buy, we've got your grandmother hostage. Your grandmother's hostage. Click this ad.
Should I just say yes? And then that's it.
Done.
Easy, right?
Done. That's a soundbite. Thank you. Yeah.
It's just, this is the thing, is that kind of the way we see it is we're a payments product. So naturally we hire intent. We're not TikTok. We're not a browsing product, right? So you're not just kind of sitting around on the couch opening Zilch because you feel like it, right? So we are a high intent product. The point is, you go online, you're on YouTube, you see something cool, you're interested in saying, as soon as you have this intent vector, that is where our apps comes into the fray, right? So we're not trying to be discovery. We just don't think that's a good idea. We think there are so many amazing apps these days, and more of them that do discovery really well. Brands are always going to have to pay for discovery. They need a budget for that. So if they want to make sure everyone sees their trainers, they're going to have to do that.
Yeah.
But as soon as our customer generates this intent vector, I have intent to get something, either to get that thing or something like it, they open our app. And that's why then from there on, we're really good at driving that sale through, because the customer starts with good intent, right? They're like, hey, I really am in the mindset of saying, I think I want to buy something, either that thing or something like it. They can come to our app, they type in what it is that they're looking for. We will push that to all of the underlying ad infrastructure across Europe, the UK, and the US. And then we get programmatic bids of commission in real time from all of the brands. So brands are paying 3%, 5%, 6% commissions in real time.
Right, because they're aware that they're about to get a much higher conversion rate. So it's worthwhile them bidding much more, because they're just so close to being about to make a decision.
That's right. So they're saying, I'm always going to have discovery as a budget. I need that anyway with Google or Facebook. I need that anyway. But now the difference is I'm not going to pay for now impressions or clicks and hope they convert well.
Yeah.
I'm not going to do that anymore. And this means I can also take this budget out of the sales team. It's not a marketing budget, because the problem with marketing with clicks and impressions is at the end of the month, you have to add up how much you spend. You have to divide it across all of your sales, and you have to look at what percent that means you're giving up on your margin. With Zilch, you don't have to do that. There's no brain damage, because you're only paying for sales.
Yeah.
So you can actually go to your sales team now and say, guys, we have a 14 or 20% or 40% margin on this product. I'm happy for you to spend 3 or 8% of that margin on whatever channels you like, but bring me sales.
Yep.
And they can now do this with Zilch. So they can go and bid, I want to spend 4%. Now, what's interesting is Zilch doesn't have a rate card. We don't tell brands what to pay us. Brands can pay nothing if they like. They can pay more if they want. The difference is that we will rank order those results and we'll give you more prominence if you're bidding more commissions. And so what we'll never do is like Google, right? So Google's sort of forgotten about the point of Google, which is I'm asking you a question, give me the answer. They forgot that for some reason. Now they give you a page and a half of rubbish, and then conveniently have moved their AI summary now from the top to the middle so that you still get the impressions and maybe click on something, because obviously they're worried about that. And then maybe you'll click 3 or 4 times and find the answer maybe. That's a problem for Google, and who knows how they're going to fix it. But for us, so what we do is, for instance, if you come to the Zilch app and you say, I'm looking for trainers, or I'm looking for even a store, let's say, JD Sports. We then take that intent, and remember, we have a lot of data around what you've bought in the past, what you can afford in the future. Google and Meta don't know that, right? So you could be paying for impressions and clicks. That person clicks, they come to your site, they can't afford your product.
Yeah.
With Zilch, we don't have that problem. We know what you can afford. So we push that anonymously into the partner network and say, there is this person with this high intent. They can afford this much. They typically spend this much. They've bought these types of things before. Do you want to bid on that sale? And brands in real time, obviously programmatically, will have set up rules to say, I want to bid for those types of sales. We'll then rank order those commissions for you as the search result to say, you want a JD Sports, we show you JD Sports. Let's get that right. But by the way, JD Sports isn't paying us enough ad commission to offset the cost of credit for you completely. So let's say it might be, in this example, £1 or £2 for you to access credit. Still the best credit product you've ever seen. But by the way, here's a better deal. You're looking for trainers, actually has Nike, here's Foot Locker. And by the way, that's free. This is 2% cashback, that's 7% cashback, so on and so forth. So if the customer is looking for value, they might now go and say, well, I was going to buy Nike trainers anyway at JD. Let me just go to Nike.
Yeah.
And I'll actually just go and spend there. Now, what the magic of that is, we've driven Nike a sale they otherwise may not have made.
Yeah.
And we've done it at a fraction of the cost of CPM or CPM campaigns.
And on the other side, so I'm the consumer. How have you got such a good understanding of what I can afford, can't afford? How does the buy now, pay later model work for you and not bankrupt you by making some mistakes?
Yeah, consumer credit is just, it's a difficult thing. It's like we always say to people, we're right above, our offices are right above Victoria Station. And, if I say to you, here's 1,000 20 quid notes, go down to the station and hand it out. All right, just pick 1,000 people and give them £20 each.
Yeah. As in become Simon Squibb.
Exactly. Well, no, here's the difference. Within 6 weeks, though, you need to get it back. All right, that's the challenge. And by the way, if you don't do that, your business is gone. All right, off you go. Let's see how you do. So it's not so simple, right? And then the question is, how do you make your decision? What would you do? Would you look at what they're wearing? Would you ask them where they're from? Like, how would you make the decision? And how would you do it in a split second? And how would you do that millions of times a day? That's really the complexity here. And so, a lot of this obviously is not mind-blowingly different to what consumer credit businesses that have done a good job of this in the past are doing. And that's why when we think of Zilch, we kind of say, let's just take two types of payment technology or consumer credit technology: credit cards and BNPL, the buttons on the checkout pages. What do they do really well? And then what don't they do so well? Let's leave the stuff they don't do well and take all the things they do well and combine those things. And that's really been what we've done. So if you think of very simply a credit card, they're simple to use, they're ubiquitous, you can use them for everything, and they're regulated. That's really important, right? You can charge back or get Section 75 protection or complain to the ombudsman. But the problem with credit cards is they revolve you into debt. There's compounding interest rate, and it can create quite an uncomfortable burden. So we don't like those things. And then you look at BNPL, simple to understand.
Buy now, pay later.
Buy now, pay later. So the buttons you'll see, pay 25% every 2 weeks on the checkout page. What's great is they're convenient because they're there. They're easy to understand. There's installment payments, so you don't have this bullet payment that's like, oh my gosh, how am I going to pay for it? And there's no interest. So that's fantastic. And in some cases, no other fees. That's different providers do different things. So we like that. The downside is a lot of them are unregulated. You can't complain to the ombudsman. There is no Section 75. If that retailer goes bust and doesn't give you the goods, you can't claim back. Yeah. You're not protected, etc. So we sort of took the best of both of these and put them together. So with Zilch, it's a regulated product. It's a Visa, MasterCard product, so you can put it on Apple Pay, Google Pay. You can go anywhere you like with this, online, in-store, anywhere you want. So very simple to use. It's ubiquitous. There is no interest, and there's no late fees with Zilch. So it's the best of all these products.
And how's there no late fees? So if you are late, then what? You just see more ads?
No. So what we've done is that we've kind of combined these things. So most credit lending, we assess that person for risk. You would underwrite this person, say, how risky do they look?
Yep.
And then you would offset that risk with price, right? That's how credit cards do this. That's how any online lender would do this. Now, obviously, that can be egregious. So then the issue is that what do? You either don't lend, so you exclude that person, or you have to charge them a huge amount of money, and that's a problem.
Yep.
So what we do at Zilch differently is we use three things. We use down payment for the loan. So how much do you have to put down of your own money against this upfront? The tenure of the loan, how long do you have to repay it? And price. We use these three things to start with. That already makes us very competitive on pricing. And then, of course, we generate ad revenue from the brand, and we subsidize that price further. So in a lot of cases, it's completely free. So that's the unique sort of secret sauce of Zilch. That's what makes this thing work. But if you pay late, we have protections inherently built into the product. So because you're paying installments, if you're late on any one installment, we freeze the card. You can't continue to use the card. And this is to protect the consumer. At the end of the day, if you're late, it probably means you're in a bit of distress. You might not be in a position to pay this back. You can also go into the app and snooze these installments. You can reconfigure the installments through the app. There is nothing worse. I don't know if you've ever had this yourself or experienced this. If you can't pay your credit card or a debt on a date, and you have to call up a call center and say to that person, hey, I can't afford it. Can I pay you another time? It's not a great experience. It's terrible, right? So a lot of people just run away from that. They have every good intention. They're just either embarrassed or it's too much effort, and you're busy in your life because, life happens. Here, you can just pick up the app. You can reconfigure this. You could tell us, actually, I need more time. And in a lot of cases, do that for free. And then, of course, if you can't do that and make good on it, we'll freeze the card. You need to catch up. You can continue to use the debit product and get rewards for that, which will then help to pay down what's owing. And then once you're back in good standing, use the product again.
Got it. And you manage a 25% profit margin, whereas other cars is so much, other businesses rather, so much less. So how does that part happen? Because it's one of those magical things, you know, as you're telling the story, it's like everyone seems to be winning, including you. Rare.
It is rare. I mean, look, there's obviously, there's always some complication, and there's a fine balance between what value do we think we bring to merchant partners, what value are we bringing to consumers, and then what is the business receiving, what value does the business get? And actually we had a 52% gross profit margin.
Right.
And so for
Had
today,
or have?
so we have a 52%
Oh, really? Wow.
gross profit margin. And so this is the unique, this is the flywheel we sort of look at and go, if you thought of this as a loyalty program, the problem with most loyalty, if you think about it, is that they either seem a little bit meaningless, they don't seem to help, right? You get these points, you can only use them on certain things you don't care much for.
Yeah.
So no one likes those. What loyalty has ever done really very well, it typically is airline loyalty programs. Those tend to do the best. So Delta Airlines, let's say, or of course the BA product in the UK. And the problem with those products is that there's only so many seats on an aircraft, right? So as the loyalty program grows bigger, in fact, the value to consumers grows smaller because you have a finite amount of seats to give up. In the Zilch ecosystem, there is no limitation. So as we drive more commerce to brands and convert better for those brands don't all of a sudden run out of product margin for those sales. In fact, those margins are infinite. As long as they're making a healthy margin, they can pay those all day long, right? And so what's great about this product is that, we're sitting right at the center of this consumer intent, a sale being made, and an infinite budget that could continue to grow as we onboard more and more customers. And so what you don't see is, as friends tell each other about the program, like for instance, I've done with the BA Amex products in the past, and as more people join, you find, oh my gosh, actually I can't get those tickets anymore. I can't find the seats.
Wasn't worth those 30,000 extra Avios points I got because my friend got 60,000 and booked the fucking tickets
exactly.
that I
so
wanted.
you get the bonus points. You can't use them on anything, right?
Yeah.
In Zilch's case, in fact, the more customers that join, the better the program gets, the deeper the subsidies become, and the more sales brands can make.
Got it. And earlier you mentioned that, Google, bad experience because you've got the search results and they're pushing the stuff down and AI. And, I was going to ask you about you disrupting Google or where that kind of sits in your head. But actually, the more interesting question, honestly, is how Google's own AI products are having to disrupt their own core business. Yeah. And so really the more interesting question here is how does AI and the speed at which that's developing disrupt your business?
I mean, there's lots of ways to answer that question. You've obviously got the more
boring...
Can
you answer it well, please?
I'm not sure, to be honest with you. I'm going to try.
We'll see. All right, fair enough.
Let me give it a...
Yeah, go.
Let me start with the boring stuff, right?
Yeah.
So you kind of get like the utility, right? So there's problems of toil. This is just like, we don't want people to answer the phone as much. We don't want people to send as many emails and so on. And those problems I just feel like are like, people talk about them like it's inventive, and I'm not sure it really is. We're a young company, so we benefit from the fact that we've had this technology almost from the start of the company, right? So if you're 20 years old and you're getting super efficiency in your call center now, good for you. It just shows us how bad your technology was. And that's not your fault. It's just what it is.
Also, to this point, interestingly, one of your major competitors, Klarna, global PR about literally customer service.
Yeah.
Like, we're getting rid of it, we're bringing it back. Two global news stories.
What they're really saying there is we're an old business. We've implemented things without any new technology, and that's because they didn't have it. It's not their fault.
Yep.
And we had to hire a bunch. We had to throw bodies at the problem because we had no good technology to do it. Now there is better technology, and guess what? We're going to use that instead of these people. I mean, that's all that you're telling people. I don't think that's exciting. That's just like, why, just get on with it, guys. Yeah. Like, who cares? So the problem...
Slow news day, though.
Yeah, exactly. I mean, it's just like, so problems of toil, obvious, get that done. The thing that's more interesting on the LLM side, right? So why for us are LLMs exciting? Machine learning, everyone knows that if your business doesn't make use of this type of technology, that would be odd. On LLMs, that's a bit different. So, something that we see in this is even helping teams in the business is really interesting. And I'll give you one quick example. So let's take our fraud team. So typically what you would have is, if we have like a credential stuffing attack, so you have someone writes a computer program, to take a whole bunch of email and password information they've bought off the dark web and stuff it into the login of the app, all right, and see, can I get into any account? And they're just stuffing millions in, all right? That's kind of a lot of the attacks that you see with apps like ours, because you can gain access to balance. So if you see that, what would typically happen is that, of course, you have some machine learning system that on the back end recognizes this vector and goes, there's a lot of logins coming from this range of IPs. That's probably an issue, right? And so it'll immediately our technology would start curbing those. And what you would see more of, for instance, is those annoying, like, hey, how many buses do you see here? You know, those squares.
Yeah.
So we don't do that normally, but if we see a heightened amount of logins, we'll start upping the technology to start slowing down the logins and making it more difficult for a machine to understand how to do that. But while that happens, obviously, we then want to generate a report for our fraud team and say, you should look at this. And today, or in the past, what would happen is they would get an alert that says there's all these outsized logins from, and there would just be a file that shows you IP, login, date, time, so on and so forth, maybe a device ID and so on. And you just get this file. And then you'd have to have a data science team to sit there and go, okay, how do we analyze this and interpret this? So what's going on? And they would have to look at this for hours and cut it different ways and go, oh, we think this is what's happening. Well, now we don't have that problem, right? Because now what we can do is we can say, so the machine learning thing spits out the file. We can pass that to an LLM and say to it, why don't you interpret here what's happening? And it can now send an email to the team and say, it's already cut the data and gone, this is a summary of the data you're about to trawl through. And so, we're seeing an outsized number of logins, from this range that have now moved to this range, and it's happened over this time from this jurisdiction, and so on and so forth. And now the company knows, oh, this looks like a credential stuffing attack that's coming from this range of IPs in this territory. And they can start there. So that's really interesting, right? Now, obviously, you could take that forward and go, one day, if you can start to get a workflow automation included in these things, which is what we're seeing with scheduling and some of the latest ChatGPT stuff, you could now schedule a workflow that says, do the certain things as a workflow to try fix the problem. And once you've done it, by the way, write a report, which it can now do using LLMs, and post that to us.
Yeah. So do you think that, obviously that's a lot of how we're going to use AI inside our business, like you say.
Yeah.
So, zooming out, I guess, what you've described, the fundamental way that Zilch works, like I say, everyone feels like a winner. So do you think it's possible to overtake Google in the $1 trillion advertising market?
I think that would be a little audacious for us to say that that's possible. I think, I think
you seem like an audacious guy.
Yeah, but maybe unreasonably audacious. I would say, our expectation, if you get back to the AI, so what's interesting as an application is, people come to the app and tell us what they want to do. My view is that that's still it's a bit annoying. If we already knew what you wanted to do, wouldn't that be more interesting? And so, what we have started using AI, I think more prominently for and interestingly, is that we're guessing what you want before you tell us. And so we have shop again feature. So when you open the product today, about 92% of the time we guess right. All right. So we actually put where you're about to go in front of you before you've told us. That's really interesting. But more so than that, if you take it forward, would be what would you want in the future? And do you even realize there's benefit you're missing out on? And a simple example would be, we know you shop at Sainsbury's every Tuesday. We know you do, right? If we can go and take that vector of intent before you get there, not at the time, and post that to the ad network and say, who is willing to provide the same basket of goods for 20% discount as an example, and put that deal in front of you before you go and do that shop, that could be really interesting, right?
Yeah.
That's adding value you didn't even realize existed. And then if you go one step further than that, how do we start to manage how you pay and where you pay without you thinking about it? Because the cognitive load to give you lots of different payment methodologies, should you pay over 3 months, 6 weeks, once get cash back, how would you know, right? Like a financial decision in real time is really difficult for you to understand as any human. If we could have a computer make that intricate decision for you one day and say, we've actually authorized this as a pay over 3 month transaction or pay over 6 for you. This is why. And of course, you can then step in and grab the wheel and go reverse that or change it. We think that's a good use of AI for us moving forward. And if you think what universe that opens, we think that moves us away from a market taker of credit card share, let's say, and BNPL share, into more of a market maker where we're saying exactly this. How do we compete with the stimulation of intent, not just the conversion of intent vector to a sale? And that then is more interesting when you talk about Google.
So obviously when you, quickly brush aside with, I suppose, very British cultural, bashfulness of, we're a unicorn, let's move off that. You did go a little red, but, there's not many unicorns in the UK. But there are a few. We're doing well. I mean, obviously, I say that. Yeah, there's quite a few, and you're one of them. So you are obviously a prominent voice. You're a leader in UK business. You are still one of the prominent few. And I'd love to talk about the future of business here in the UK. So one of the biggest problems that I have noticed, I'm sure you have too, is if you get a great British business, there is a lot of temptation to then just go and list on the New York Stock Exchange. Bigger numbers, America feels more exciting, etc., etc. And then at the end of the day, NASDAQ, the UK has taken a bit of a hit. So how are you thinking about that? How are you involved in trying to basically save, British companies going public in Britain?
Okay, I mean, so, I would say the first thing is, if you look at even just fintech in the UK and in Europe, right, there are, a huge number of unicorn companies here in the UK. It's actually quite incredible to see. And the amount of capital raised for these companies in the last year, if you go back 2 years, is more than all of Europe combined. Okay, so when we kind of think of Europe just generally, we really do need to be quite proud about where the UK is from this point of view.
But that would not be very British of me.
No, but
we must,
I would
must
encourage
put ourselves down at all times.
Exactly. You're like, let's be self-deprecating about this. But actually, it's just fantastic, right? It's unbelievable. And the technology sector here in the UK is the third largest on the planet. You're talking about, the third largest technology sector just behind the US and China. That's pretty incredible, right? It's a small country. So that's just the starting point. So you go, okay, cool. So how do we think about that? What do we do with that? And you do find that you get a number of the news articles. The media is quite tough, which has always been something I must say I've found a little bit difficult to understand. The media is really quite tough on the outcome of some of these things and some of these companies. We've lost another company to the US.
And we don't know why, even though we criticize them the whole time for being successful.
Yes, and that's the thing, right? So it's like, exactly right.
Yeah,
so
something. I don't know what it is.
Yeah, I'm not
can't quite
sure
put
why.
my finger on it. Was it me telling them that they were horrendous for creating value? Maybe?
And they shouldn't be paid, and they shouldn't.
Exactly. Shouldn't be successful. Was it us? Nah, can't be that.
And that is, I think there's
another evil founder. That must be the reason.
There's a strange. I'm not from the UK, so there's a strange cultural nuance there that I couldn't purport to understand, but what I will say is that there is a lot of optimism in the UK. There's a huge number of companies here that are doing fantastic things. The talent is abundant, right? And the capital comes here for that, right? So that's fantastic. So then you look at all of that and you go, okay, well then what's going on and what's happening? Why would companies go elsewhere? And I really just think that a lot of this is driven with policy. It's a bit like, why would people like me want to come here and build businesses here and create jobs here? Tax-paying, employees here who are going to go and spend a lot of VAT here and so on and so forth. Why would we all do that? And there are policies, fiscal policies that drive that. SEIS, EIS, entrepreneurs relief, and so on and so forth. And so, what really I think is going on, and we founded something called the Unicorn Council with Innovate Finance, and Janine there spearheading everything.
Sounded like a children's book until you said Innovate Finance.
Exactly, yeah. And I must say the funny thing about the Unicorn Council for FinTech is that we initially had it the other way around, FinTech Unicorn Council, but the acronym didn't land so well, right?
Oh, that's amazing.
So we decided we just switch the order of the words.
Yeah.
But so what's great is we have about 100 billion of market cap FinTechs, UK FinTechs, in this council. And that's everything from some of the names you mentioned, the Revoluts, Monzos, Zilches, etc., in there. that would be like half of the FTSE 100 if these companies list here. And they're getting bigger, right? That's the incredible thing. So these companies are growing. They're rolling forward towards what you could see as potentially a listing. And there's a couple things that seem to happen. The one is they don't quite get to listing and they sell, right? And in a lot of cases, they do sell to foreign investors. Is that even a problem? Do we think that's a problem? And should we fix it? And then you go to...
Well, what's your view on that?
I think the circumstances are always different. It's not so obvious to say. I just don't think it's a case of you could say, well, you could fix that problem and that's not going to be an issue. There's lots of different reasons that happens, right? But I do think that naturally, if people feel like they can't get liquidity and they may be not sizable enough to list just yet, it's a tough spot. What do you do? And then naturally, your bigger businesses tend to be elsewhere, so they can afford to buy those companies. So can you bring liquidity to those companies earlier or get them to list? Like how do you fix that? Now we know, for instance, the LSE with Julia Hoggett, David Schwimmer, etc., have been working on this product called Pisces, which is kind of like a pre-IPO market product that allows you to list secondary. And this is another world first innovation from the UK, like the FCA the sandbox that we went through with the FCA was the first of its kind in the world, right? So the regulator's actually quite innovative. You don't normally hear those two words put together, but in the UK they are. And so, this platform is meant to allow people to list private shares and trade those formally before they would go and publicly list the company.
And just so I understand, that the value of that is that the founders and teams can get some liquidity, which, counter to what a lot of people tell you, actually keeps them motivated to stay in the business for longer.
Absolutely.
Right.
And so then you would say, okay, they may not then sell the company because, of course, they've been starving for 10 years. Yep. They've put their life
now
on the line.
Now they can build a bigger business.
And now they can go and swing a little bit for the fences and build something bigger and actually then may have the chance to list. Then you've obviously got listing. And how liquid is the markets here, whether it's AIM, LSE, how does that look? What policies are driving pension funds to invest and buy and hold British stocks? Well, we know that if you look 15, 20 years ago, pension funds were allocating almost 50% of assets to British stocks. Today, it's less than 4%. Why is that? There must be a policy driving that behavior. No one wakes up one day and the herd doesn't wake up one day and just go, oh, you know what? We're just not going to do this thing anymore. It doesn't happen like that. So there must be a policy driving that adverse behavior. What is the policy? And it needs to be fixed. And so you look at that and you then go, once we can get people buying into the market and holding British stocks, you get more liquidity and then that creates more speculation in the price. And so everyone starts to feel better about life. That's just kind of like how you would look at it. Now, we've had lots of conversations through Unicorn Council with relevant policymakers, Downing Street and so on to say, where are we with all of this? Like, what is the game plan, right? Because if you think about this, like you would run your business, you don't just wake up and go, well, I'm kind of working on a bit of this and a bit of that. You know what I mean? You don't do that. You're like, guys, it doesn't matter if we're wrong, but let's at least outline the plan. And this is what the conversations we've been having. And actually, to be honest, very productively, I think so far with the new government and policymakers is to say, what is the plan? Is this a problem? Yes, we think it's a problem that companies sell too early. Okay, fine, cool. So you've got Pisces. How many companies do we think it'll stop being sold? Just pick a number. Pick one, right? Okay, we think this many. How much market cap does that keep here British owned? Pick a number. Okay, it doesn't have to be right, but let's just start with a number. How many of those then could go on to list here because they've stayed and not sold? Okay, how much market cap does that create? How many jobs does that create? How much VAT do those people spend? And so on and so forth. And then at least you've got a plan that says, right, we're going to launch this. We expect it to get from 20% to 80% of these companies leaving by this date. And that's going to have this much impact on companies staying private here or companies listing here. The knock-on impact is, we have more listings. How many more? Do you have a number? How many? Pick one. Okay, it's this much market cap. Great, that goes in. Whether it's AIM, LSE, let's forget about that for now, but it goes in. All right, great. Pension fund reform. When do we want that to happen? Cool, it's happened. How are we going to drive the capital into these companies, because just reforming the pension fund doesn't get the capital into the companies, right? We consolidate all these pensions. We make it that they can have a bigger team that can actively invest. That's a good start, because right now it's passive. We changed the rules so that they don't get judged on the cost of investing, but the outcome. And then we want to see that money find its way. Right, how much of the money do we think finds its way? When? Which year? Pick a number. Just let's have a plan, right? And that's how we've been thinking about this, is to say, if all we do is put a plan like this together, at least there's something we can report against to say, are we moving in the right direction? Because right now it actually doesn't matter if the picture looks good or bad. What we want to see is the picture.
Yeah, there's no like clarity on how to decide around this. You have most of the stuff people can dream of. You have millions of users, got billions of dollars of value, and a business that you are so passionate running that's adding value to the world, your consumers, you love your team, all of this stuff. So what is your advice for entrepreneurs? You've got 55,000 that just started this month.
Yeah.
What's your advice to them? How are they going to start great businesses in Britain today?
We kind of specifically, it's funny, we don't, so when I still meet everyone that joins the business, and we always kind of say to every new joiner, we don't give advice, because a lot of this kind of business advice in these books are quite backwards narrative fallacy stuff, right? It's easy to connect the dots in reverse. At the time, a lot of these people didn't know what was going on. So it's hard to give people advice. I would say the only thing we tend to tell people who join our company is the first thing is just go and just get going. Do something, right? Just do it. It's don't think about it. Don't talk to people about it.
Yeah, do the thing.
Do it, right? Go and do it and iterate it forward. That's really critical. So that's like the main thing we just talk about is action. There's nothing that kills hopes and dreams like inaction. So action is the big thing. But, specifically the way I think of life is you need to be interested in it. Not, people speak about discipline and passion, and those things help. But if you're not genuinely interested in it, the chances are likely you're not going to be brilliant at that thing. So just go find something you're interested in, right? Don't try and build a business. Go find something you're interested in and become brilliant at that thing, put in the hours, and then, we think that that's a good, there's a good chance you'll be successful at that thing. Of course, put in lots and lots and lots and lots of hours, and ultimately the way you think about work-life balance is that there is none. There's no such thing. No such thing for an entrepreneur. There's no such thing for someone who's interested in something. You will never think of it as a balance if you're genuinely interested in something.
So be interested and do the fucking thing.
Exactly.
Amazing. Philip, thank you so much.
Thanks for having me.